Best rates for auto insurance in the U.S. There is no doubt that adequate car insurance is required, but you should not have to pay for an arm and a leg to obtain it. You can find the best rates for auto insurance in the U.S. for your circumstance if you understand what factors influence auto coverage rates as well as some shopping tips. Introduction to auto insurance. In the U.S., auto insurance is a contract you enter into with an insurance company that protects you from financial loss in the case of an accident or theft. The insurance company agrees to cover your losses as outlined in your policy in exchange for you paying a premium. Auto insurance covers the following. Property damage or theft of your vehicle. Liability is your legal obligation to others for bodily harm or property damage. Medical expenses include the cost of treating injuries, rehabilitation, and sometimes lost wages, as well as funeral expenses. Most states require basic personal auto insurance, though laws vary. Auto insurance coverages are valued independently, à la carte, allowing you to tailor the coverage amounts to your specific needs and budget. Policies are typically issued for 6 months or 1 year and are renewable. When it's time to renew your policy and pay your premium, the insurance company sends you a notice. Your auto insurance policy will cover you and any other family members on your policy. Whether you are driving your own car or someone else's, with their permission. Your policy also covers you if someone who is not on your policy drives your car with your permission. Your personal auto policy only protects personal driving, such as commuting to work, running errands, or going on a trip. It will not cover you if you use your car for commercial purposes, such as delivering pizzas. Comparison of auto insurance rates in the U.S. in age. When trying to compare car insurance rates, and find the best rates for auto insurance, age is a significant factor. Younger drivers pay significantly more for auto insurance than older drivers because insurance providers regard them as the riskiest drivers. Using 3 different ages as examples, 18, 25, and 30, you see how insurance rates fluctuate over the course of a typical young adult's driving career. Full coverage car insurance costs an average of $6,777 per year for an 18-year-old driver. The same driver, now 25, pays $2,184 per year for car insurance, a 68% decrease. However, rates tend to level out as drivers reach adulthood. At 30 years old, the same driver pays $1,922 per year, which is only 12% less than a 25-year-old but effortlessly the lowest car insurance rate in this group. Car insurance rates generally fall as you get older, but then rise again in your later years because senior drivers pose a greater risk than middle-aged drivers. Factors that affect auto insurance rates. Age. Insurers consider age as a factor influencing car insurance because statistics show that drivers of various ages pose different risks. Teen drivers, for example, are more responsible for driving recklessly and being involved in accidents than drivers in their 50s. Gender. Although many auto insurance companies consider gender when setting rates based on statistics indicating various crash risks for men and women, some states prohibit gender as a factor affecting car insurance rates. Hawaii, Massachusetts, Michigan, Montana, North Carolina, and Pennsylvania are among those states. A person's residence or location. The location of a person's residence is a very popular factor influencing car insurance rates among insurers. Of course, the state is important because it influences whether a person purchases no-fault or tort-based insurance. Furthermore, auto insurance companies take into account a person's zip code. Zip codes, according to insurers, tell them the following information that affects risk: the frequency of car accidents, the rate of car theft, the rate of vandalism, the rate of claims, the rate of fraudulent claims, the weather, and the pervasiveness of uninsured drivers. Relationship status. For some insurers, Marital status influences car insurance rates based on statistics claiming that married drivers pose less of a risk to insurers than single, divorced, or widowed drivers. Not all states, such as Michigan and Massachusetts, prohibit the use of marital status as a rate-setting factor. Credit rating. Credit scoring refers to the use of a person's credit score and/or credit history in the rate-setting process. This is a factor that influences car insurance rates since insurers believe that drivers with poor or no credit, as opposed to those with good or outstanding credit, are more likely to file claims. And those claims will be more costly.